All right, good afternoon or good morning. Welcome back here to Trader Minute. Great to have you aboard. I want to jump on here for about 5 minutes and take a look at some of the earnings here that we saw today, and we saw some earnings out of Johnson and Johnson. Who reported earnings. You can see the kind of the gap up and, jumped here early, kind of been pulling back a little bit since. We saw Bank of America, which was kind of flat early, then pulled on back. It's kind of been rallying back here just a little bit, but it's not dragging the sector down. In fact, it's pushing the sector on higher. So, that reaction with Bank of America, and then UNH, who was set to gap up about $9 this morning. Pretty good report. Pretty good report. Not a lot of flaws in the report, but you can see just boom, flush to the downside here, today and on big volume. It very much looks like a fund manager coming in, selling, saying enough's enough, I'm moving on, and, getting that action. But when it comes to earnings, we've talked about this idea that, hey, you know what? Yes, we're going to see an earnings contraction, right? That's going to happen. But what about revenue? And if companies like UNH can continue to grow revenue and continue to kind of push with this just, absolute revenue growth train, then the bears aren't going to have a whole lot. They're just not going to have a whole lot. Because revenue eventually turns into earnings. And so you can talk about earnings contraction all you want. As long as there's revenue growth, that revenue is going to translate into earnings eventually. And when you look at something like UNH, beat on revenue again, some of the revenue guidance, yeah, but even with some of the revenue guidance, we're still looking at this huge revenue growth train. It's a very positive, here for UNH. J&J, same thing. Only J&J's revenues have been, a little bit more choppy and a little more dicey, but I think J&J is very interesting. And here's why. If we look at J&J year over year, their revenues are about flat. Right? If we go back to the same quarter of last year, their revenues are pretty flat. If we look at next quarter and compare it to the previous year's quarter, their revenues are actually going to be down. That typically, leads to a sell-off in a stock. If we look at the next quarter, same thing. Revenues are going to be down. I mean, this is 2 quarters in a row where revenues are going to be down from the prior year. Well, actually, 3 quarters in a row where revenues are going to be down year over year. We talk about this Teflon-style market where, bad news, just market doesn't care. If it has a glimmer of decent news, it runs with that, and bad news, who cares? It just slides right on off. Well, here's J&J, 4th quarter of this year, right? Now you look at the revenue picture. Well, it's set for growth. Okay, so all right, we'll ignore the revenue contraction in the next couple quarters. Over the course of this 9-month period, because you know what? Way off into the distance, we're going to have revenue growth. And that's just the reality of what the market's looking at and how the market is digesting this. This is a report for J&J that in a different market environment, we could see the stock down 10%. Or we can see the stock, maybe not 10%, but 5, 6, 7%. We can see it down significantly in a different environment. But that's the environment we are in. The reality is we are in the environment that we're in. And, J&J is a good example of that kind of Teflon-coated element here. Bank of America. Bank of America beat on earnings, missed on revenue, right? Missed on revenue expectations, but beat on earnings. This is one where revenues year over year actually down, right? They actually have year over year drops in revenue here, but next quarter, right? Next quarter is going to be a year over year increase. And while, yes, it's going to go down the following quarter, it'll still be a year-over-year increase. And while, yes, it's going to go down the following quarter, it'll still be a year-over-year increase, right? But not very much. I mean, the revenue growth here with Bank of America is very microscopic, especially, compared to a lot of others out there. kind of a disappointing report for Bank of America off of the heels of last quarter's. Because last quarter's was such a kind of a blowout that there was almost this feeling of, well, can they actually really gain significant momentum to become maybe the best bank out there, the bank that people want to be in? And we saw that. We saw a rotation out of J.P. Morgan and into Bank of America. Well, what are we seeing after Bank of America's earnings here today? Well, we're seeing a rotation out of Bank of America and buying into J.P. Morgan. Because when we compare the two earnings reports, there is no question. There is absolutely zero question that J.P. Morgan is king again. They're just absolutely king again. When it comes to the best in breed, best bank stock out there, that glimmer that kind of Bank of America gave last quarter of saying, you know what, we could take over this top spot. We could become kings. Nah. It's J.P. Morgan, hands down. They take that back here after this earnings season, and you can see with the performance of the stock, you can see with the reaction today where J.P. Morgan's getting bought while Bank of America's getting sold, and I don't expect that we'll see that a lot where J.P. Morgan goes up and Bank of America goes down. I don't think we'll see that a ton, but I think to bet that J.P. Morgan from right here, right now, until J.P. Morgan's earnings next quarter, to bet that J.P. Morgan outperforms Bank of America, I think is one of the best bets out there, right? That's not normally a bet that you can make on with options, but you long J.P. Morgan, you short Bank of America, you don't care what the market or the sector does, you just play for J.P. Morgan to outperform Bank of America, and we could see it be a 4, 5, 6% differential, and which from an investing standpoint, makes a lot of sense there, especially when you can put on a little bit of a hedge. So it's that's kind of what I expect to see after those earnings. But what's the bottom line when it comes to the revenues? The revenues are good enough in the earnings that we've seen so far. They're good enough for the bulls to to have their arguments, right? They're not bad enough. They're not eroding enough for the bears to really gain a ton of control based on that, at least in the sample size so far. Now, keep in mind the sample size is very small so far. It's not large enough to make a statement about the entire earnings season. We'll be able to do that kind of middle of next week. But early on, that's kind of the assessment here with that. All right. So anyway, just quick look at today's earnings, companies that reported earnings, and some of the things here with them. There is a chance that J&J triggers bullish on the algorithm here today, on the trade algorithm here today, and we'll kind of see how that sets up and how that goes. But there's a technical chance of that happening here today. No real chance with JP, or no real chance with Bank of America or UNH there today. Thanks for hopping on. We'll talk to you soon. Talk to you later.